Hi guys, welcome to my channel again. It's a joy to have you here as always. Well, today our main objective is to apply the concepts that I explained to you guys on a previous video called the 5 basic accounts, in which I explained the concepts of the 5 basic accounts in accounting. In this exercise, we will try to apply these concepts for you to have a very clear idea of the application of them. Let's do like a quick review about the last topic that I told you, which were the 5 basic accounts. So everything in accounting will be either one of these 5 accounts, which are assets, liabilities, owner's equity, revenues, and expenses, okay? And most of the people get confused between assets and expenses. Assets are basically 2 things, which are goods or things you own, and the second thing are rights. Liabilities, they're very easy because liabilities are debts or obligations that you have to do or to pay or to deliver something, okay? That will be liabilities, debts. Owner's equity, that is kind of freaky. Owner's equity, it has like 2 main divisions. One of them is stockholders' contributions or capital stock, which is the money that the investors put into their monies into the company for them to become stockholders. And the other component of owner's equity, that will be retained earnings. Retained earnings is the same as accumulated earnings. Revenues are basically resources coming in, like sales, but for them to be revenues, collecting them, it is not the important thing, but delivering that merchandise to my client or delivering the service. And expenses, that will be resources going out, everything you pay, but paying it is not the important thing in accounting, but that thing that you paid or not paid, if you use that, that is the keyword to know that I have an expense, okay? That is basically like a summary of the last topic that I'm telling you that I will try to apply here in an exercise, okay? So let's try to do one exercise together. Let me just project. Let me share my screen right here. And this is a case of a company which is called Autoplace, which buys and sells auto parts. And it's totally confused because it has a lot of accounts. And this company does not know where to put them, does not know where to classify them. So we will try to help this company to classify these accounts into these 5 ones: assets, liabilities, owner's equity, revenues, or expenses. Okay, so let's start, morritos. Okay, so the first account, that will be bank loan. Bank loan, it means that I'm putting myself in the place of a company. So it means that I am the one who asked for that loan. I am the one that owes that money. So if I owe, I have the obligation to pay. So that will be a liability. Okay. Other creditors. Creditors are the people which I also owe. It's like accounts payable. So if I owe, again, I have the obligation to pay, and that will also be a liability. Salaries. Salaries are, is that a liability, Gio? No, for that to be, if those were salaries that I already owe, the name of the account would not be only salaries, but salaries payable. Remember that the word payable, it means that you owe, and that will be a liability. If this account is only called salaries, it means that those salaries are already paid, but the most important thing I already used. So those should be expenses, okay? Taxes, same story. Taxes, guys, will never be revenues. Gio, but when I get my taxes returned, those are not revenues. Those are like your rights that are going down, but I will explain that later. In the meantime, taxes, you should pay them. And as this is not called taxes payable, it is not a liability. So those are taxes that I paid, that I already used. So that, again, that will be an expense. Okay. Land, it's mine. So as those things are mine, that will be an asset. Okay. Other debtors, creditors, it's guys that I owe. Debtors, it's totally the opposite. Debtors, those are guys that owe me. So if they owe me, I have the right to collect from them. So every right, that will be an asset. Other debtors is the same as accounts receivable. Anything receivable, it means that you have the right to collect because they owe you, so that will be an asset. Gain on sale of land. Any gain, any good thing, guys, every good thing, it will be a revenue in accounting. So gains, of course, those are good things for you, and those are revenues. Clients, it's the amount that my clients owe me. Again, it's like an accounts receivable. They owe me. I have the right to collect from them. So if I have a right, that will be an asset. A patent gives me the right to explode, to sell, or whatever, something I invented. So as I have the right, that will be an asset. So let's go to the other column. And it says interest on the bank loan. Gio, bank loan, we already said that it was a liability. Yes, but I'm not talking about the bank loan. I'm talking about the interest on the bank loan. So if I have a bank loan, I will need to pay those interests. So those interests, as it will be resources going out, that will be an expense. Okay. Cash. As I'm the owner of that cash, that will be an asset. Mortgage payable. A mortgage, it is a loan that the bank or a financial institution gives you for buying, for example, your house or long-term assets, fixed assets mainly. So it is a loan, it is payable. I have the obligation to pay, so that will be a liability. Investments, that is, I reserve an amount of money that I put in the bank, and the bank is paying interest for me. So that little money that I put aside in the bank as an investment, it is my property, so it is an asset. Advance to suppliers is the same as you paying in advance merchandise to suppliers. So if you paid something in advance, you have the right to receive something. So if you have a right, that will be an asset. Cost of goods sold. Cost of goods sold, as its name, it says it is the cost of what you sell. For example, let's say that this phone, let's say that I buy and sell these phones. Let's say that I buy it for 10 and then I sell it for 12. So 10, which is the cost of what I'm selling, it is my cost. I had to pay for it. It's resources going out. So cost of goods sold, that will be an expense. Advance from clients. Totally the opposite as advance to suppliers. On advance to suppliers, you paid in advance. On advance from clients, you collected in advance from your clients. So if you collected in advance, Gio, that will be a revenue. No, remember that revenues are not revenues in accounting when you collect them, but when you deliver the merchandise to your client. So it is not yet a revenue. When you collect that money, as you collected that money in advance, you have the obligation of delivering that merchandise. So if I'm obligated to do something, that will be a liability. Okay. Oops. Okay. Liability. Building. That's mine. It's something that I own. It's mine. So that will be an asset. Cleaning services. So the amount that I pay to the lady that comes in here, comes in and cleans everything, that will be its resources going out. That will be an expense. Let's go to the other column, capital stock. Capital stock, that is the same as stockholders' contributions. Capital stock is the money that you receive from investors that want in your company. You receive money and then you give stocks in exchange. That money that came in, as it is owned by the stockholders, it is owner's equity. It is the first component of owner's equity, which are stockholders' contributions. And the name of the account is normally called capital stock. Okay. Gain from legal suit. Again, any gains are good things for me. I will receive a lot of money. What a beauty. Everything good for you, that will be a revenue. Perfect. Depreciation on the building. Oh, that's a hard one. So the building that we had here before, it's mine. It's an asset, which is mine, but that building, I did not put it as an expense, even though, let's say that I paid it all. I don't care if I paid it all, because remember that the keyword to know that I have an expense, it's not that I paid for it, but it's already used, totally used. So when I bought the building, it's not totally used, so that for me will be an asset. But as I'm using it, that asset will get used and will become an expense, and that expense, it's called depreciation. So this depreciation that is here, which is an expense, it is the part of the building that has been already used. So as it has been used, it is an expense and it is called depreciation, okay? Maintenance. I had to pay for the maintenance of my cars and my tunes or whatever. It's resources going out, so it's also an expense. Dividends paid. Or I should go and say, well, if it was paid, it should be an expense, but it is not. Come on, what are you telling me? Dividends paid, it is not an expense. Why? Because dividends paid, it's a distribution of profits. I'm distributing my profits from retained earnings from here, from these accumulated earnings that I have. I decided, the board of directors of the company decided to distribute these profits among stockholders, and those dividends, as they decrease my retained earnings, and retained earnings, they belong to owner's equity. Dividends paid, it's a negative owner's equity account. Why negative? Because it decreases owner's equity. It decreases my retained earnings because I'm distributing those profits among my stockholders, okay? What about amortization? Let me paint it in another color. It is the same, exactly the same example that I gave you before. I will paint it in yellow. This depreciation, I told you that it was the part of the building that has been already used. So when assets get used, if those are fixed assets are the ones that have like tangible nature. They could be touched and felt, like the building, like machinery, like computers. When those get used, that expense, that part that is used, it's called depreciation. But when an intangible asset, something intangible you cannot touch or feel, like rights, for example, the patent, the trademark, and so on. When those assets get used, it is the same thing, but you know how accountants are, they're very weird. So they don't use the same word. Instead of calling that depreciation, they call that amortization, but it is exactly the same thing. It is the same concept. It is the same cat, but a little bit dirty, okay? Exactly the same thing. So amortization on the patent, again, it is an expense. Interest on investments. Investments, we already talked about that. Investments, we talked about that. As that investment is mine, it is an asset. But I'm not talking about the investment. I'm talking about the interest on the investment. So if you have an investment, those interests, would you receive them or would you pay them? Well, if I have an investment, I guess I'm receiving those interests. So if I'm receiving those interests, that will be interest in my favor or on my favor. So that will be revenues, of course, because that will be resources coming in your pocket. Sales, that is a typical, and it is the most important revenue, or it should be the most important revenue of a company. For that to be considered revenues, those sales, in this example that I sell auto parts, it means that those auto parts have been already delivered to my client. I don't know if they have been collected or not. It is not important for them to be revenues. The only important thing for sales to be revenue is that that merchandise has been already delivered to my client, okay? In the moment that I deliver that merchandise to my client, that for me becomes a revenue, okay? What about suppliers? Suppliers, it is the amount that I owe to my suppliers. It's the same as accounts payable. So if I owe, that will be a liability. Okay, last column, perritos. Let's do it. Oh my God, that is a tough one. Accumulated depreciation. What's that? Gio, we already talked about depreciation. But yes, this is kind of different. Let me paint it in another color. These and these. I will explain it for depreciation, but it's exactly the same idea for amortization. So we talked about the depreciation. It is an expense because it is the part of the building that has been already used. Okay. But this is not called depreciation. If you see, there's a slight difference. And this is called accumulated depreciation. So, but what's the big deal? What's the big difference? Let me explain. Let's say round numbers. Let's say that I bought this building that we had here before. This building cost me, let's say, 100 million. Okay, 100 pesos or whatever, $100, whatever. Okay, and sorry about that. Sorry. And then let's say that building cost me 100 pesos, and let's say that this building will last 10 years. So rounded numbers, if I divide the cost, 100 divided by, whoops, don't you get it? I cannot answer you guys. 100 pesos or $100 divided by 10 years, that will be 10 millions or 10 pesos every year. I will have a depreciation expense of 10 pesos in every one of these 3 years. 10 pesos, 10 pesos in year 1, 10 pesos in year 2, and 10 pesos in year 3. Okay, so for accumulated, so expenses are recognized every period. In every year, I will consider an expense of depreciation of 10 pesos. Okay, but let's say that with that building, I've been I've been having this building for, let's say, 3 years. So it means that today, on accumulated depreciation, which is the sum of all my depreciation expenses, I will have 10 for the first year, 10 for the second year, 10 for the third year. My accumulated depreciation after 3 years, that will be 30. So that accumulated depreciation of 30 should be presented like besides the cost of the asset. So when I present you guys, my investors, the total of my assets, I will go building, the amount that I paid for it, which were 100 pesos. And then I will, below that, I will present the total amount that has been already used in the total of the years. So that will be the minus 30. So 100 that cost me minus 30 that has been already used in total, the difference, which is 70, accountants call that book value. So book value, it's the amount that it's worth for me now. It cost me 100. I've used it for 3 years, 30. So the book value is 70. And that name of book value, guys, it is because in a lot of years before, the accounting used to be done on these huge, I don't know if you ever saw it, huge books. Like in Mexico, they were like green and they really smell bad, very old books. So the name came from that, okay? So that bottom line on accumulated depreciation, that will be a negative asset. Why? Because it subtracts the cost of the asset and tells me what is the value today of that asset for me. Okay, same idea with accumulated depreciation. I will not repeat it again, but let's say that I have a patent and the amortization of the patent for every year will be 1,000 pesos. After 2 years, I will have this accumulated depreciation of 2,000. That will be subtracted from the original cost of my asset, which is the patent. So it is a negative, again, a negative asset that should be presented with my assets. Okay. Loss from contracts, every loss, as I told you, every good thing in accounting, that will be a revenue. Every bad thing in accounting, every bad thing, like losses will always be expenses. Bad things in accounting, expenses. Retained earnings, accumulated profits, accumulated earnings, that is the second component of owner's equity, which is here, okay? Interest receivable. Anything receivable, it means that they owe me. I have the right to collect from them. So that will be an asset. Prepaid advertising is the same as advertising paid in advance. I paid in advance. So if I paid in advance, I have the right to receive that advertising. So if I have a right, that will be an asset. Merchandise inventory, that inventory is mine. I'm going to sell it, but in the meantime, it is mine. So it is an asset. Sales returns. Tell me something, guys. Having sales returns, is it bad or good for you? Of course, bad. Nobody wants to have a sale return. If you have sales returns, that is something very bad for you. That is a sign of bad quality, and that will be an expense. Okay. The last one, salaries payable. Payable. It means those are salaries that you already owe. So you have the obligation to pay. So that will be a liability. Okay. Isn't that easy or what, guys? Okay. I hope this helped you a lot. And follow me for other exercise and other videos. Chio knows I'm expecting you. I will see you later. Bye-bye.